Everyone. So my name is Valentin Schmidt. I'm the business editor of the Epoch Times, and Jimmy and Tone asked me to host the show so they can focus more on content and talk about the important things rather than asking themselves stupid questions. So we're gonna kick right off with very good news, which is BitGo. BitGo is raising 42.5, or they already have raised 42.5 million. Why is this relevant? It's because they haven't done an ICO. They're a legitimate company. They're going through proper channels to get the money. Your thoughts on this, Jimmy?
Well, first of all, BitGo is a great company. Obviously, they had some strife during the 2X stuff, but now that 2X is over, it seems like more or less they're an aligned company. And right after 2X is, they said they raised it in 2 weeks. So if you go back 2 weeks, that's more or less right when like 2X failed. So right after 2X failed, they went out and raised like this much money. It doesn't surprise me that there's this much money out there. There's a lot of investors that want to invest in the Bitcoin space, and certainly BitGo is one of the better companies in this space, and they know what they're doing. They have really good engineers. They have engineers that are contributing to the Bitcoin ecosystem. So I'm very happy for them. Congrats, Mike and Ben, friends of mine. So yeah, that's my thought on the matter.
What do you think about that, Tone? ICO versus legitimate VC round?
Well, no, we all knew that BitGo was never going to go ICO. They actually have a product. They actually have employees. They're actually not planning to run away with any of the money. So the ICO thing was never really a question for BitGo. Like every time I see these, I'm like disappointed at the fact that these are the companies that are getting like millions and millions of dollars in VC run funds. And we still don't have any good like phone wallets that give you privacy, secure your coins, and don't crash every 3 minutes. So things like that are disappointing. I mean, core development still doesn't have the kind of funding it should for as an open source platform. There's plenty of funding, like if you want to control the Bitcoin protocol. Well, like again, every time I see these stories, like Coinbase getting 100 million, I don't know, just. I'd rather see more of this money go to the open source part and the privacy part and the true Bitcoin part of the equation. And the returns on the other end is not going to be from the venture itself. It's going to be from the fact that you put like a third of your money into Bitcoin and then the other 2/3 into making Bitcoin what it's meant to be, a permissionless, unconfiscatable value transfer. And then you make your returns by holding the Bitcoin. I don't understand why more investors haven't figured that out yet.
Yeah, that's a common theme we see. And actually at the latest CoinDesk conference here in New York, people also said, well, it's hard to beat Bitcoin's return as a venture investment. So so Bitcoin needs to take it easy for venture capitalists or venture investors to actually produce returns that are higher than that. But basically you're saying, Tone, get your act together, actually deliver some better products and more money for the actual open source core project. So let's move on to the next story, which is Bitcoin futures. And not only are they trading very high at around 18,000, that also implies around $2,000 spread to the current spot price. And we're going to let Tone kick off with this one.
Well, it looks nice and cool on the surface. In reality, that $2,000 or whatever $1,500 spread, I mean, that's your risk, right? It's not easy. Like if you are a traditional trader that has the clearance to trade these futures, yes, it looks like you should have gone out on the market and actually bought those futures. Because if you think that a professional trader is going to try and cover the spread between illegal and what do you call it, like risk-free exchange versus Bitfinex, where your funds can be hacked, I mean, yeah, you could be profiting on that spread for like 6 months, and then all of a sudden, all your funds disappear, right? And this is the problem. Like a lot of these spreads are like, oh my God, the spread between Korea and let's say some other country, oh my God, the spread is huge. Why isn't someone closing that spread? Well, because it's not easy to move the money, and you don't know where your money is, and there is risk in hacks. If you're trading on 10 different exchanges, yeah, you could be profiting from arbitrage, but if one of those exchanges goes away, like a Cryptsy or a BTCE, then a year's worth of profits on the spread could actually disappear. People have to realize that spread trading, I do spread trading in the option space, and you make 5 or 10%. There's no such thing as making 1,000% in spread trading, right? So if an exchange gets hacked for your principal, a year's worth of gains will actually disappear. Now, if you have a spread between two different futures, a future that's expiring near term and a future that's expiring, further out, sure, you can try and capture a little bit of that spread, but you have to keep in mind that one of those futures will, mature ahead of time, and then you'd have to roll it over, and then again, you're not going to capture the whole spread, just a small part of it.
So this is the chicken and the egg problem, asking why didn't the big financial players go to Bitfinex and Bitstamp and Kraken in the first place when it's a purely financial product, Bitcoin, and no storage involved? That's precisely because of the risks that you describe. And then if you're trading the futures, that risk goes away. But in order to arbitrage, you still need access to the exchanges. And what you're saying is that the spread indicates that the big players aren't using the exchanges, not even for.
Right, they're not. Now, I did hear that big players did buy up a bunch of OTC Bitcoin, and that makes sense, right? If they went out and bought up a bunch of Bitcoin because they see Bitcoin as like a long-term investment, and now they can sell futures against it when they feel that it's toppy and try to capture that spread because they are now holding on to the Bitcoin in their cold storage. So this way they feel that they're responsible for it, and now they can do it. So that could be it, in which case perhaps once the CME futures launch, we might see more interest in selling the future than buying the future. And guess what? All that would mean is the spread's going to close between the CME futures and the underlying price, which is what I'm expecting it to have.
What do you think about this, Jimmy?
Well, so I actually heard that none of the major brokers are allowing short trading of the future, which is what you need in order to close the gap as a Main Street investor. You need to short it on the future and then buy the underlying, and that's how you can close the gap. But no one's really allowing you to do that, and we know that institutional investors have difficulty buying the underlying because of the custody issues around it. So this may just be a symptom of the current incentives at play, which is that you can buy the future, but you can't really sell short the future very easily. But someone has to, right? Mm-hmm. But someone has to, right? If there is a long future, someone is short on the other side, right? Right. So they probably gave the green light to a few. This could be another reason why the price is kind of high, because there aren't as many people that are able to short. Not willing to sell. Like, people would want to, short it, right? Because they can easily go out and buy this Bitcoin in OTC markets and get it delivered. But maybe not easily, but they can do that. So that could also lead to a higher price. I mean, GBTC is the reason why GBTC was trading at like a 500% premium until that premium crashed, because people now have the futures to do the same thing even simpler. So this will happen. I mean, the CME could come out, or the CBOE. They might give a green light for shorting to the bigger institutions, and they might ask them, hey, we will give you the green light if you show us how much Bitcoin you have in cold storage. This way we know that you are kind of hedging your short bet. So we can do that. They might be able to do that.
So still a lot of kinks being worked through, even with the futures, but obviously we knew that this wasn't going to work 100% from day one. So still a lot of market efficiencies to be gained here. Let's jump to the next story, which is a very, very, very significant one, because Bitcoin skeptics, they often say that Bitcoin uses a lot of electricity, which is correct. So the gold bugs, they say, well, gold doesn't use any electricity, it just sits there. And the bank people say, well, we don't know how much our system uses. But this story here that Jimmy's pulling up describes in very great detail how much gold mining costs and how much the data centers to store all the other financial or other data uses, and Bitcoin comes out relatively well in comparison. Jimmy, why don't you go ahead?
Yeah, so I mean, I never really understood this argument. People act like, Bitcoin uses electricity, but other forms of money do not. Of course they use electricity. They use lots of other resources besides electricity. Like if you're up until, like the 70s or something, gold delivery was done through U.S. Postal Service. You think that's free? With Bitcoin, you can do it on through the internet and just, send money that way, and it's one part of a much larger block. But with gold, you literally had delivery that took like 5 to 7 days, where people would ship things over back and forth until gold vaults got involved and they started like lending their gold and things like that. There's also mining, obviously, and even paper money. There's tons of costs that go into that. You think your bank was built like with free money, or any like it doesn't cost any any money to like build the actual bank or the vault or the software that runs the vault, or their disaster recovery setup or any of that stuff. There's tons of electricity that goes into all that stuff. And they focus on this because they think the masses don't understand all that stuff. And I think most of the people that are critics of Bitcoin don't really understand what like it really means to have a lot of these currencies or these other forms of money, and what like sort of hidden costs there are in terms of like world resource usage. I think Paul Stork wrote a pretty good article a couple years ago. Proof of work is the cheapest thing, and like pretty much everything, when you boil it down, is essentially proof of work. Just some are more obscure than others. Now, he was saying that about proof of stake mostly, but this also applies to other forms of money like gold or paper money or whatever. Like they all have their costs. They're just more hidden, or they're negatively they're negative externalities to the environment or something like that. It's just it's just not obvious. But I mean, Bitcoin, it's obvious, it's straightforward. You can figure out where electricity is cheap and mine there. I think it's much, much better than pretty much all of these other forms of electricity use.
Yeah, just for our viewers' benefit, the Bloomberg article says Bitcoin uses 8.27 terawatt hours per year, and gold mining, just the mining, uses 132 terawatt hours per year, and just the production of banknotes and coins, so that's even excluding the service of the banking system, uses 11 terawatt hours per year. Tone, your thoughts?
Yeah, this never bothered me as well. Look, we need it. We need security on this, right? I mean, the Bitcoin mining is providing security, and most of the people that are not happy about it are the people that are pushing their own agendas with their own coins, trying to be rich on their proof of stake nonsense, which, as Paul Stortz's article and Jimmy just pointed out, will eventually devolve to proof of work as well. It's just going to be a less efficient proof of work, but that won't change. Yeah, I never had a problem with this. I mean, I always look into the future, and I'm like, look, Bitcoin mining can actually revolutionize our electricity usage. I mean, people will come up with such creative ways to use electricity for Bitcoin mining. We may get to like geothermal and complete solar energy and renewable energy so much quicker due to the capitalistic motivation of mining for Bitcoin. So I can't wait. I can't wait till like in 20, 30 years, there's so much energy being used for Bitcoin mining that some of those operations are just kicking a little bit back because they don't really need that. And that's providing free energy for the regular people. I see more good coming out of it than bad at the end of the day.
So this fascinating article. Everybody should check this one out. Let's go to the next story.
And that graphic with all the countries in orange, that was that Bitcoin mining is now takes up more electricity than all of those countries in orange. And eventually it'll be the whole world, right? Bitcoin mining, I mean, the US will be the last barrier, but US and China will be near the end. But sooner or later, like every one of those countries is going to turn orange because Bitcoin mining will take over.
Yeah, and I want to just point out, like, money is the base layer of civilization. It is extremely difficult to have any sort of civilization without money. And money, it's because money facilitates trade. If you don't believe me, go to Zimbabwe or Venezuela. Tell me how those countries are doing. They essentially don't have money, and that's why they are suffering to a large degree. So, I mean, to pay some cost in electricity is totally worthwhile, in my opinion. And people seem to think, okay, we're just wasting it. No, you're not wasting it. You're getting civilization as a result. You're getting sound money as a result. That's totally worth it.
Actually, yeah, what Jimmy is saying is another layer to this. Not only is Bitcoin relatively inexpensive, also what you're saying is that the unsound money, the fiat money system, the bank money system, it wastes a ton of capital, and capital is labor and resources. So with a sound money system, you save that wasted capital and actually use it to do something productive. And then you may expend multiples of what Bitcoin is using, and it would still be worth it.
Yeah, I agree.
So let's jump to the next story, which is the ETFs. We get a whole list of new ETFs coming, which are other forms of paper trading Bitcoin. Jimmy, you looked into this. Why don't you give us a bit more backdrop?
Yeah, there's a lot more ETFs being applied for, and I think we see a Bitcoin ETF fairly soon. Because CBOE and CME have futures trading coming up. What these ETFs can do is utilize these derivatives to essentially give people exposure to Bitcoin price fluctuations. I mean, they're going to be cost because you have to transact in futures and things like that. But more or less, that's what this sort of new class of ETFs are doing. Is they're saying, okay, we'll use Bitcoin futures in order to make Bitcoin ETF work. And I think this was hinted at back when the Winklevoss twins, when their ETF was denied. That's like the first one up here, but they're appealing. Is okay if you have CBOE or CME sort of like doing some sort of derivative, then an ETF might be possible. Well, the SEC then pretty much gave the green light to that sort of future, or I mean that sort of ETF being available. So that's what a lot of these ETFs are like going right after. You have a ton of them that are going to go in that way. Equity Basket will use Bitcoin for Bitcoin futures, and they are all sort of looking to get in on this in the next few months. I'm not sure how that affects the underlying, but certainly having more exposure available in the capital markets will definitely make it more popular.
Tone, do you think it will affect the underlying?
Again, not if they're not storing it. If they're storing it, then a little bit. Like the one on that list that makes me pay attention is the ProShares one. ProShares have a lot of experience, just like the CME have a lot of experience in futures. ProShares have a lot of experience in ETFs. So they are the experts on this list particularly. I'm curious, a paper derivative, right? Which isn't making me all that comfortable. But the other one doesn't make me comfortable either, right? Like the Winklevoss Trust that's going to store Bitcoin. That's not all that comfortable either because A, that Bitcoin can be hacked, or B, that Bitcoin could be confiscated by the government. So first I need to know is the government going to declare storage of Bitcoin legal or illegal, right? I mean, that's the biggest problem that we're facing. If the bill goes through that anonymous or concealed storage of Bitcoin is actually illegal, then I don't understand how all of these products could actually be legal, right? Because the majority of Bitcoin is still stored in a confidential way. I don't know, it just creates this weird scenario. We'll see what happens. I'm waiting for one of these things to be approved. I mean, we can speculate all we want. I don't think this is coming for a little while longer.
Yeah, I think this is another sign next to the futures that there's huge demand for these paper products because people don't want to have the hassle of educating themselves how to buy and store bitcoins through an exchange, or B, they can't do it because of regulatory reasons. So ETFs, futures, and the Bitcoin investment trust by Barry Silbert, it was always trading at a huge premium as well, kind of like the futures products right now. So this is another chapter in that story. We hope that people can educate themselves and buy Bitcoin the traditional way. Now, once they buy the Bitcoin, they can look forward to a couple of hard forks coming, which gives them claim to, that's the next story, which gives them claim to Bitcoin hot, BTX, Super Bitcoin, Lightning Bitcoin. So we get all sorts of great stuff coming up. Jimmy, what do you think about all this?
Well, I had no idea there were so many. I had known about Bitcoin Cash Plus, Bitcoin Uranium, Bitcoin Platinum, Super Bitcoin. I did not know about Bitcoin Hot, BTX, Lightning Bitcoin, Bitcoin King, BTCS, Bitcoin God. I mean, like these kind of like seem like it's getting a little bit ridiculous. How many of them will have value? How many of them will be open source? How many of them will actually like be traded on major exchanges? That's what I want to know. And a lot of them have like basically Twitter handles. They seem to be mostly from China. I'm not entirely sure, but a lot of them seem to have Chinese backing to do a lot of the development. Which I'm not exactly sure why. Maybe China sort of banning ICOs has sort of pushed a lot of people towards going towards these things. But yeah, I mean, I find it really interesting that a lot of them are on block 499,999, and another one is at block 500,000. Like, what's with these numbers? I don't really understand. Why are they doing it? We'll see if any of these have value. I'm sure they'll trade at like 1 or 2% at least. And I've been advocating for this. Some exchange needs to make some sort of wallet that lets you insta-dump all these coins and just bring more Bitcoin right back to your wallet to make it super simple for people.
That would be nice. With respect to the numbers in Chinese culture, the 8 represents money, and is generally well regarded, and 9 is good fortune. So that's why they're doing it at these blocks. What do you think about that?
Well, my view on it, I guess I'm gonna steal this from one of my comments that's been scrolling by. Chinese knockoffs really know no bounds. That's all this really is. Starting with Bcash, which was a very popular Chinese knockoff, and now this whole venture is just evolving. So I'll just leave it there. If BGold can't break 5% for me to cash out, everything else is just completely irrelevant.
What about the insta dumping though?
I think it's dangerous. I don't think any wallet should do it. I'll take the other side of Jimmy's view on this.
So Tone is always more concerned about anonymity and security rather than making.
I mean, if you do the wallet properly, you move the funds first, then
Jimmy,
move the.
We don't have a proper wallet now. And you want a proper wallet that's actually going to dump the knockoffs. I mean, one of these developers is going to, put a copy and paste a line in the wrong place, and he's going to dump someone's Bitcoin.
Well, this is why you need good review and have it be open source. But I mean, first exchange that comes out with that, they will be super popular. Everyone will be on your exchange, and that will be the place to dump all your.
Exchanges do it now. But then you're not in control of your own private key.
Well, that's why I want a wallet that with an account on the exchange.
I'll take a good secure Bitcoin wallet that doesn't crash every 20 minutes.
Okay, last story before Tone starts talking about the price is the SEC, which has commented rather favorably on fintech and blockchain. I mean, it's kind of a surprise that they're in favor of innovation, but that's basically what they said. but they do want to have it, of course, according to their rules and make everybody safe, et cetera, et cetera. What do you think, Jimmy?
Oh, hey, Valentin, read that the part in the middle that's totally in bold. So if Jimmy scrolls up a little bit.
A number of concerns?
Nope, not that one. Yep, please also recognize that part. You got to read that out loud. I love it.
Okay, please also recognize that these markets span national borders and that significant trading may occur on systems and platforms outside the United States. Your invested funds may quickly travel overseas without your knowledge. As a result, risks can be amplified, including the risk that market regulators such as the SEC may not be able to effectively pursue bad actors or recover funds. But that's a real pity, isn't it, that they can't chase people all over the globe?
Well, right. Well, and somebody said like Ethereum popped on this news. Well, right, because it sounds like the SEC is not interested in chasing the 8 founders of Ethereum around the world for creating a security. I mean, it's an interesting statement. They don't say anything in it. They do ask a lot of questions towards the bottom. They say, hey, ask companies these questions. And people like myself have been asking these companies these questions, and none of these companies have been able to properly answer these questions. And all I get named is I'm not open-minded about it. I mean, that's the list of questions, right? Like, what the hell are they doing with this money? And most of the time, they don't know what to do with it. They're just out there partying with it, or just, taking it and running away with it. I think the hammer is going to come down hard. I guess they're either waiting for a really big operation to screw up, like Ethereum. But for now, they're kind of popping the easy ones, the ones that don't file the proper paperwork. But the SEC made it clear that not a single one of these things is actually legit. They're not saying that it's illegal yet, but they are saying that they haven't given approval to any of this. And invest at your own risk. And I know how this is going to end. Everyone's going to come crying to the SEC saying that they got scammed.
So let's not forget that regulators are always a few years behind the curve, so it may take them a while until they figure out how they properly prosecute this. But yeah, at least they know that a lot of these ICOs have huge issues. So what is your thought on this, Jimmy?
Well, I find it hilarious that they're releasing this now after all of the ICOs that happened over the summer, and just as ICOs are starting to die down, then they release this statement, right? I find it hilarious. I look forward to their hard fork statement, like December of 2018. Yeah, I don't know. Like this mostly is saying what a common sense person would say. Like, ask some questions. Make sure they're not like just taking your money and things like that. I actually didn't think it said very much, but Marco Santori, who's sort of like a celebrity Bitcoin lawyer, if you will. He's like, well, now we have some guidance. Now we can do some of these ICOs. I'm like, oh, yeah, good luck selling some of these. I
read this whole statement. How the hell did he get that out of this? I'm not a lawyer, but
you go ask Marco Santori or engage him on Twitter. I'm sure he'll have some things to say about it. But he thinks that there's some clarity around the ICOs after this statement. But we'll see. Maybe this list of questions is pretty good. Like, that's a way to make it more or less legit or something like that.
Yeah. Yes. So bottom line, before you think about investing in an ICO, first of all, probably don't do it. But then if you really want to answer those questions, whether the company is really legit or is there a company, that's oftentimes also not clear.
All right, guys, I got to get to the price because I got to go to the airport. My flight was delayed. I was supposed to be doing this from the airport, but I can't miss this thing. Otherwise, I'll be in Toronto for the rest of the winter. Not exactly my plan.
Not good. Okay. Let's have Torn have a crack at the price and then let them dash off.
All right. Let's see here. I gotta do desktop one. All right. Let's do desktop one. Okay. Let me move you guys out of the way. So I tweeted this out yesterday, just pointing out that I did have on a 4-hour. There was reason for a little bit of a pullback with these arrows. Now, keep in mind, the little green arrow that you guys see on the screen, that one was drawn during one of my shows 2 days ago, calling for a short-term top on the 4-hour chart, coinciding with this 913 sell, giving us a little bit of a pullback and then higher. Now, the daily is also giving us a 9 sell for a potential, multi-day correction and then higher. The problem with the daily, and I pointed it out, is that when we're sitting at all-time highs, it's an indication that we're probably going higher. So my 9 daily will most likely be ignored. The 9 on the 4 hours, since it came early on before the 9 daily, could have caused a little bit of a pullback and then higher. The weekly is also turning bullish. So pretty much the Bitcoin price is bullish. So now let's take a look at the live chart. Oh man, hold on a second. I gotta stop screen share because I'm about to dox my email. It's a bad idea. Let's go back to screen share. Here we go. So here's the weekly chart. The weekly chart is looking good. We're at all-time highs. We've been sitting at all-time highs for too long. So I am expecting a little bit of a pop higher. Here is the daily. The daily isn't a 9 sell, but we're sitting just above the all-time high. So most likely here, this 9 sell is going to be ignored a bit, and we go higher from here. The 4-hour pulled back as expected, and now if we can actually break out later today. So far, these arrows that I drew in, about 2 days ago, are looking really, really good. And it looks like we're going to be going a bit higher. Zooming in a bit, we're in a range here on the hourly as the 50-hour moving average is trending up. We have multiple resistance lines right here. Once we break above that, once we're stable above 7,500, we're probably going to get a pop close to 20,000. If we get this blow off top, and then the CME futures launch, and then things might actually drop down pretty quickly. But for now, once we're breaking out of this all-time high, it's going to be a nice sweet pop. So let's see where we can get.
Fantastic.
All right, guys.
So over to Jimmy.
All right. Well, this song is done.
Bye, guys.
Okay, have a good flight. See you later, Ton.